Hello, I'm Robert and welcome to my channel where I talk about everything algorithmic automated trading, or simply algo trading. Now, if you've been following my channel for a while, you've seen that I put up a lot of shorts discussing my current forex positions, along with the impact that it has on Jackrabbit Relay as a whole. One of the biggest issues that I've talked about in those videos is the information that I need to make decisions about my trading. Some of the most important decisions come from understanding the charts and the numbers. In fact, I have said more than once that I spend my entire morning doing nothing but studying numbers. And what you see on the screen is exactly that. This is one tool that I have been testing, trying to perfect over the last several weeks. That really is one of the biggest issues within algorithmic trading. Not necessarily getting in or out of the market, but the actual tools needed to help you see the direction of the market and how that market is proceeding. So let's talk about the tool we have on the screen right now. Right here on the left-hand side is my bid price or buy price, and then all of my current positions. The spread from the bid price, the actual number of units I have in that position, and the frequency or count that price has occurred in my analysis. These are my live trades. This is the live market right now. So I am actually seeing this market real time, second by second, literally updating in real time, providing me with information. Now, all of these numbers, this is the order book. And right now we can see that the buying side is 55.84% of the order book. And the selling side is 44.16% of the order book. So 55% leaning towards a buy or long position, with only 44% leaning towards a sell or short position. Now, if you've watched my short video this morning, you'll know that I said I believe the market over the course of this next week is going to go down more. How much more, I don't know, but I believe the price will go down more. And this information is where I believe that price will go down, because I see correlations, patterns, and the way the market is moving in terms of rapid volatility or slow volatility. And here, the highlighted number, this is 0.84% of the order book for the depth on the screen. So I'm looking at a depth of 30 for the order book. That is 30 transactions away from the bid price and 30 transactions away from the sell price. And here, this is 0.61%. Now, both these numbers represent the highest percentage within their side of what you see on the screen. This is what I call a proximal analysis. I'm not looking at the entire order book except for these numbers up here, the volume percentage. What I am looking at is a very specific short-term range of the order book and how those numbers will correlate to my own current positions. And based upon what I am seeing, this is support, this is resistance. You see that the resistance is closer to the asking price versus the support being closer to the bid price. So I believe we are closer to the resistance level, which will begin to force the market into a reversal or a change of direction. Now, in spending the morning watching these numbers, I've watched this value drop down the table, and I've watched this value climb towards the top of the table. So I've seen distances change drastically throughout the morning as we've progressed with the actual market. So let's sit here and watch this for a few minutes and see how the market changes. See how the market correlates with the amount of trades that I have on the left-hand side. This is where you begin to understand supply and demand. This is where you begin to understand real support and real resistance, where the buyers and the sellers tug it out to decide whether an asset is overvalued or undervalued. And I believe, based upon what I see here, that the Euro USD is overvalued and that price will drop. Now you see the percentages here, and these are in percentages. I chose 5 digits for percentages because I wanted a thorough analysis of those percentages. I wanted to be able to correlate on a much deeper level than what a pretty little picture is going to give you. And you can see now just where we sit with this price, how the market is dynamically changing. And how this plays out. So as you trade, as you build your algorithm, as you think about your process, one of the most difficult aspects of that process is actually not when to get into the market. That's the easiest part of the entire process. It's more difficult thinking about when to get out of the market, because that requires budget management, risk assessment, and risk management. Those figures happen here in the numbers. And this is where the biggest problems occur. Because when you are trading, one of the biggest things you run into is whether or not you have the right tools. And sometimes the most complicated part of the entire process is just knowing what tools you actually need. In my case, or in this case particular on the screen, I built this entire process from scratch. So the tools I needed didn't exist. And in part of that process is understanding what data I needed to actually build my approach. And the data is what you see. I needed the order book, and I needed the actual list of trades. Information where I can see and watch the market in near real time. And that is the biggest and most critical point of all. Near real time. I'm not going to get real time because that's just not possible. I don't have a big enough connection or a couple of hundred machines to process data 24/7. So near real time is realistic enough for me to continuously make a reasonable profit. And that is one of the expectations that has to be made when you are trading. When do you examine your data? How frequently, how consistently? Does time even matter? And while for the program I built, time doesn't matter, I still don't want winning trades lingering on the broker that could possibly turn into losses. So there still needs to be some reasonable framework to process my trades as quickly as reasonably possible. And this also tells me how fast the market changes. I can use this sampling to figure out how to optimize my trading approach. I can see the depth of my own trades and how quickly the market moves by looking at the spread from a given position that I hold versus the current bid or asking price based upon whatever direction I am moving in. So as you progress, you see realistically a very prominent approach that builds and continues a consistency within the market. And that consistency is your own trading approach. And it doesn't happen overnight. It can take years to develop a technique that you feel comfortable with. It doesn't even have to be a homemade technique. It could be a charting tool with Bollinger's or MACD. It doesn't matter. All that matters is that you find a way of getting the data you need to become profitable. That is the hardest part of algorithmic trading. The trading is simple. Understanding the market is not. Now, this particular program, once I get it working right, will be going up into the private repository where anybody can use it to watch their trades. But for now, it is extremely buggy. Now, I'm going to stop this and let's go to my long account for Euro JPY. And again, we see just where the market is. We see the depth of the order book. We see the current trades. And we see even one that has a significant profit waiting for the bot to collect it. An 820 pip profit. That is quite nice. And you see the order book. You see the depth of the highest position. You see the level of percentages within the sides. and you see the same thing on the selling side. And here you see there's a maximum of roughly 0.38% versus 0.15%. Literally double the pressure of selling for the highest rate on the screen versus buying. And yet the order book is slanted towards more buying than selling. So you can see which way the markets are moving. And that is a fundamental and critical process of trading this market. And using any currency pair, you're going to see the spread. You can compare exactly the spreads. And you can see just how those spreads correlate with the market you're in to determine your risk assessment and your budget management approaches. So when you begin trading, don't focus on your entry point. Focus on your exit. Think about when you're going to be getting out of the market, the risk that you're going to be associating with getting out. When are you going to get out? And then from there, decide your entry point. That is how you become successful in the long term, by taking account of your risks up front, by understanding the budget in the very beginning, and by focusing on the real numbers, whether it's real time or once a day. But study the numbers. Charts are wonderful. Pictures are great. But they don't tell you what you need to know. The real numbers do tell you what you need to know. You see the correlations. You see the patterns. You see the frequency of change. And that can help you make decisions appropriate to your trading and your risks. So as you continue to watch your markets, prepare and think about where you want your portfolio to go. Even though these are short-term trades, they have long-term consequences. So this week, I think we're going to see a bit of a turbulent market considering the last 2 weeks. I don't think we're going to see a huge down drop like we have seen, but I do believe that there is room for the price to correct more downwards. Study the charts, study the data, and focus on your intended goals for your trading. For my particular situation, my bot is running the way it should be. My strategy is where I want it to be. So think and focus on your prospects of your market data. Take your time. The one thing that you should never do is rush a trade. If you don't feel comfortable with it, don't take it. Because realistically, a rushed trade is likely to be a bad trade. If you like this video or want to see more content like it, please hit that like button. It really helps the YouTube algorithm in getting this kind of content out and sharing it. If you're not subscribed, please subscribe to the channel. Thank you for watching, and until next time.